The S&P 500 saw a big rally today, up 0.82% after the CPI data this morning, leaving a pretty sizable gap here on the chart between the 60-40 and 60-60 area. We topped out at just above 60.85. We closed 60.84. This is actually zero DTE GEX. Most of this is going to be rolling off today, which will be leaving the 6100 GEX and the 6150 GEX as the next two largest gamma exposure levels. We continue to see pretty big volume coming in at higher strikes. Here is the 6100 strike. We had over 150,000 contracts traded at that level today, and as you can see, price obviously did not reach this 6100 zone, so that could be a lot of speculation coming in for a move later this week back up to that 6100 level. We did nearly tag it back here on December 5th before, of course, selling off, and so this could be another attempt back up to that 6100 strike. However, we are starting to see a little bit of signs of topping. I know Sean's going to talk a little bit more about the technical. Sean, what are you looking at today?
Yeah, thanks, Anthony. Great points on the zero DTE aspect as well. And we have yesterday's newsletter, we highlighted QQQ and how basically we had 90% of the negative gamma expiring yesterday. That continues to be a dynamic that completely shifts what we expect every day. And it's good that every morning we're able to start out looking at what the gamma picture looks like for that day. I did want to point out a few things in terms of the VIX. We had this really amazing volume at 40, the 40 strike. And of course, the VIX has been basically hovering along this area of support that we could trace back to early 2023, sort of a resistance turned support level. Of course, the dealer cluster is all the way up at 20 compared to the current price of 13. So that's basically a 50% difference. If we go over to the chart, I wanted to point out that we have yet another VVIX divergence. The VIX, of course, looking fairly negative, but we are above the whole moving average at 13. So I wouldn't be surprised to see this fall to 13 and then the VIX find some sort of support. But when we see the VVIX, which is the index measuring the future expected volatility of the VIX, it was up 3 points today, almost 4 points. And the VIX is negative. When we start stringing those negatively correlated days together between VIX and VVIX, that's a pretty good indicator that we may see a VIX spike in the future.
Thanks, Sean. Next, I want to take a look at Nvidia. Nvidia, a big move today, up nearly 3%, closing just above the 139 level. You'll notice here our lower dealer cluster zone. This has been in place for the past couple of weeks. It served as a support level as price dipped just below it, right around the 135 strike before bouncing and retracing all the way back down to this same level. And now we've got a bounce going on today, and these large gamma exposure concentrations are still there, the 150 strike, and we still have large volume coming in at that level, even though it's over 10 points higher from where we're trading right now, over 200,000 contracts traded at that 150 strike. So there's still an opportunity for a move up into that level here in the next 2-3 weeks. But obviously a lot would have to go right in the market for that to occur. If we just take a look at our 3D surface model here, you can see heading into the January 17th expiration, which is where we see a lot of that gamma exposure expiring at the 150 strike. We've got it both in the January 17 expiration and in the December 20th expiration. So that combined is a lot of that gamma exposure to the 150 level. But you can see even if you go out into February 21st, the largest GEX is at 140. So it's a little bit more of a mixed picture than it was, let's say, 3 or 4 weeks ago in Nvidia. But coming back here to our chart, I do still think there is a potential for a move back up to the 150 strike, maybe by year end or into the January 17th expiration. So that's definitely something we're going to be watching.
Thanks, Anthony. I'm going to take a quick look at John Deere, which is DE. You can see right now we're basically at this largest negative gamma cluster, but gamma is positive, and we have fairly large clusters at 460 and 470. Our gamma levels chart backs up what we see on the gamma graph, which is that we're in this dealer cluster zone. This is a spot where we think dealers may become buyers. And there's a number of reasons why we might see support for the price here. And of course, this upper dealer cluster zone fits pretty well with the 470 gamma that we just pointed out was concentrated on that 1220 time frame. Briefly looking at the chart, we can see that we had a really positive move from this mid to late November time frame, and the Keltners are in a fairly significant upward trajectory. We are below the whole moving average, but based on kind of combining this picture with what we see on the gamma front, I typically consider being below the whole to be bearish. And you can see, sure enough, we have dropped since we've been below that, but we're getting to a point where I think there's at least some evidence that we may see a rebound up to retest this area. Looking at John Deere as one name that isn't at the at an extreme high at the moment, but it has a positive picture.
Thanks for that, Sean. Let's take a look at Tesla. Tesla, huge move today, up 6%, closing above 425. You can see that's the largest gamma exposure concentration, or just above it here at the 420 strike. We mentioned that, I believe, in yesterday or the day before's video. The 420 looked like a potential next target. Did not expect it to come that fast. I mean, the move has just been insane, and this is really the second leg. This isn't even showing the first leg that we had, which was down here from the election into mid-November. So this extension on Tesla is massive. We are coming into nosebleed territory up here. We've got our upper dealer cluster zone, and there is some GEX growing at the 440 strike, but with the extended move trading above this 420 level, it looks to us like any further movement up here is going to be met with selling pressure. We did have a lot of volume coming in between 400 and the 420 strike, and not a lot of volume, relatively speaking, at these higher strikes. So that's something that often can serve as a potential signal that the move is starting to slow down. So that's something we'll be watching for on Tesla's, a little bit of a pullback here in the next week or so. And I want to switch over here to another big mover today, Google trading above the 195 level. Huge move the last two trading sessions. Today alone, it was up nearly 5.5%. If you recall from our previous YouTube videos, we were looking for a breakout above the 180 to 183 level. So we got that obviously yesterday in the big move, and we got a continuation follow through today. Now we're trading at 195. The 200 level looks to be an obvious target heading into year end. And this is actually a name that we traded here in our community Discord recently. This is a post we made a little over a week ago on December 4th. Again, you can see we highlighted that we need to get above the 183 level. We had GEX concentrated basically between 170 and 180. This 200 strike had been there for a long time, and actually when we were trading back here in this zone, the 200 strike was one of the largest GEX levels for Google. And so, Google basically got hit with this Chrome news and had this retracement before finding a foundation and starting to rally. So, the GEX at the 200 strike was still sitting there. It just looked a lot smaller because we were so far away from it, after this sell-off down here. And so it was a little bit more of a speculative play at this particular point, but we thought it was worth it. We actually went into the January 17th expiration on this play. But after the move yesterday and today, we had to lock in those profits. $1,250 in gains. That was over a 12% move on our educational portfolio. And so we closed out that 185, 200 call debit spread. We'll be looking for another re-entry point if we can get any kind of pullback, maybe to the 190 strike, maybe even down to 185 if that's even possible. That would be an interesting place for a potential re-entry for a move back up into that 200 level. I don't know if that's going to be possible before year end, but we would sure like to take advantage of it if it does occur. And guys, remember, you can check out our community Discord absolutely free. I'll put a link down in the description below. We've got a ton of great traders in there sharing their trade ideas and market analysis every single day. So you definitely want to make sure you check that out. Also, don't forget you can access our gamma exposure dashboard and our option flow analytics tools by heading over to geeksoffinance.com. I'll put a link in the description for that as well. Thanks so much everybody for watching, and we'll see you guys in the next video.